Good morning and welcome to your Danlytics pre-market edge for December 11th. Look, we're going to cut right through all the noise this morning. We'll give you the key data, your action plan, all before that opening bell. Let's get right into it. So check this out. While Wall Street was sleeping, the Fed's bell rang, and you better believe that bell is about to send echoes right through Dalal Street. Something happened overnight that has totally changed the game, and you absolutely need to understand it to figure out today's session. Okay, so our entire story this morning starts with the U.S. Federal Reserve and what they decided overnight. It's not just about what they did, but more importantly, what they said. And trust me, it's sending some serious ripples across the globe as we speak. So the Fed gave us something the market is calling a hawkish cut. I know, it sounds like a total contradiction, right? I mean, they cut rates, which is usually great news for the market, but then their commentary was super cautious. They basically signaled, hey, don't get used to this. And that little bit of nuance, it's everything for us today. And you can see the confusion play out perfectly right here. It's a tale of two markets, really. Wall Street just saw the headline, rate cut, and they rallied hard. The S&P 500 just shot up. But then Asia wakes up, actually reads the fine print, hears Powell's cautious tone, sees how many people disagreed with the decision, and the mood just soured. All their major indices started to dip. What a difference, huh? And that's where we come in. Dalal Street is now stuck right in the middle of this global tug of war. So the million-dollar question is, what's it going to be at the opening bell? Are we going to follow America's optimism, or are we going to side with Asia's caution? It's a real cliffhanger. Okay, now this is where it gets really interesting. This chart tells a huge story about where the money is going. You've got the foreign investors, the FIIs, selling off and pulling out a massive 16,000 crore. But look at this. Our own domestic players, the DIIs, are stepping up in a big way, pouring in almost double that amount. This is the battle right here, playing out in real time. So here's the bottom line. Our domestic money is basically holding the line. They're creating this huge support floor for the market, soaking up all that foreign selling. But you have to wonder, it's a pretty fragile situation. How long can they keep this up? And that brings us to the actual battleground. These are the numbers you need to burn into your brain today. For the Nifty 50, it's all about 25,700. That is the absolute line in the sand. If we break that, watch out below. For BankNifty, you're watching that 58,800 to 59,000 zone. Seriously, keep these levels front and center on your screen. But, even with all this global uncertainty swirling around, there's a really powerful domestic story brewing. And this is where the smart money is hunting for opportunities today. And here it is. The RBI is basically rolling out the big guns. You can only call this a liquidity bazooka, a massive 1.45 lakh crore being pumped into the system. This is the counterpunch to the Fed's caution. This could be the wild card, the surprise catalyst that the bulls have been waiting for. So the natural question is, where's all that cash going to go? Well, two sectors are really jumping out. First, banking. I mean, they're the direct beneficiaries of all that RBI liquidity. No brainer. And then, kind of surprisingly, you've got the IT sector. They could get a double boost from a weaker rupee and the hope that the Fed's move will get Americans spending again. All right, enough theory. Let's talk action. How do we actually trade this? Given this whole clash between global fear and domestic strength, we've got two high-conviction ideas for you to consider. First step, we're looking at Axis Bank. The logic here is just simple and powerful. The RBI is opening the floodgates of cash, right? So banks that are ready to lend are going to be the biggest winners. Axis Bank is sitting in a perfect spot for this. A lot of folks on the street think it's a prime candidate for a major re-rating. So here are the numbers to watch. The plan is to buy on any dips we see this morning. We're looking for an entry point somewhere between 1,200 and 1,220. The target? We're aiming for that 1,430 to 1,480 range, with a nice, clear stop loss right at 1,150. Okay, our second idea is a true giant, Reliance. Now, this play isn't really about today's news cycle. This is about something much, much bigger. We're talking about a massive catalyst on the horizon. For the very first time, they've actually put a timeline on the GO IPO. And let me tell you, that is an absolute game changer. For Reliance, the strategy is a little different. We're looking to buy in around the current levels, somewhere between 1,520 and 1,540. Now, remember, this is more of a longer-term hold, maybe 6 months, with a target of 1,680 to 1,730. The idea is to get in before the market fully starts pricing in that huge value unlock from the GO IPO. We'll set the stop loss at 1420. All right, so let's tie all of this together. Here is your final action plan, your game plan for the moment that opening bell rings. Step 1. Watch Nifty 25,700. That number is everything today. It's the pivot point. Step 2. If and only if that support holds, that's your green light. Start looking to buy the dips in our key sectors like Access Bank and the big IT names. Step 3. Think of Reliance as a strategic buy. You're accumulating this one for the big IPO catalyst, not for today's drama. And Step 4. Just be patient with stuff like FMCG and autos. It's probably best to stay on the sidelines there until the market shows its hand. You know, when you boil it all down, all the talk about global central banks, money flows, sector rotations, it all comes down to one thing. The entire story for today hinges on one single number, 25,700. That's the battle line. So the question is simple. Will the bulls defend it? We're literally moments away from finding out. And just a quick reminder, of course, this content is for informational purposes only. Please remember that all markets are subject to risks,